Hi, hello, hi everybody, hi everyone. Welcome to Venture Capital TV from La Token. My name is Sunny Mohanty. I'm the regional director of La Token and also the host of VCTV. And I'm very excited and happy to have you all back on VCTV. We're today going to discuss about cryptocurrencies and investors' interest, especially from the institutional players. Why are they interested to invest into crypto suddenly? After Tesla's investments, I mean, we've seen so many institutional players coming into crypto. So we're going to know what is driving that interest into crypto investments. So yes, today I'm joined by speakers who are deeply involved. Some of them are deeply involved in crypto business, and they have also invested recently into non-crypto companies, which means they're bringing traditional companies into crypto as well. So that's very interesting. We have a use case as well to discuss today. So again, welcome back, Patrick, Adrian, Gary. Happy to see you back on this episode of VCTV. So let's take a quick round of intro before we deep dive into what is driving that interest from institutional investors to invest in crypto and Bitcoin. I'm going to start with Patrick. Hi Patrick, how are you?
Hello, I'm great.
Okay.
So I'm Patrick Poirier, and I'm a general partner at Dragon's Vault. So we're sort of an investment fund that invests in small and medium-sized business, but we have a different investment model where we created our own token as well. That is a crypto annuity, Cryptium, and that's what we use as the core investment when we make an investment into a business. We convert part of their cash flow to Cryptium. So this way we can make a return for our LP from the token itself, not just from the equity. So it's highly liquid and much better than the typical 20 to 40% return a year. So it's a really different investment model.
Yeah, and we're going to discuss about your recent sort of investment as well. You've just moved to Singapore from Canada, correct?
That's right. I've been here just 1 month now.
And what made you to move to Singapore from Canada? Just for my understanding.
It's saying the crypto regulation is a lot better than Canada and the US. The weather is better. It's kind of impartial with like with the rest of China and the rest of Asia. So it's a good middle ground to be on both sides of the fence, I would say.
Perfect. And welcome to Singapore, Patrick. And I'm going to discuss your experience in 1 month in Singapore. Thank you. Next, I have Adrian. Hi, Adrian. Welcome back. Thanks for joining today.
Hello, Sonny. Thank you. Patrick should mention that maybe the women in Singapore are nicer than the women in Canada, but was too shy to say this. Am I right or not, Patrick?
I get stared at a lot more than in Canada, and I don't understand why so far. We'll see.
Okay, so I'm Adrian Niculescu, serial entrepreneur and investor. My genius zones are marketing, sales, and business development, and I love to keep my hands dirty in these areas. Besides my advisory roles and board membership slots, I'm involved actively in few projects. Cloudcoin Consortium. Cloudcoin is a post-blockchain digital currency. Faster Capital, a Dubai-based accelerator and incubator for startups. Sarah Global Ventures, which is a London-based venture capital firm. And also I'm involved in Virgin Startups UK, Richard Branson's program as a mentor. Happy to be here today.
Fantastic. Thank you so much, Adrian. And I really thank you for joining last minute. Thank you. Last but not least, Gary. Gary, thank you for joining.
Yep. Hi, everybody. It's great to be here. Great to see Patrick, yourself, Sonny, and Adrian. So my name's Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 startups. I've involved in IPO, NASDAQ IPO on the original management team of Click Software, an Israeli-based company brought over to the U.S. sold to Salesforce 26 months ago for $1.35 billion, and also Eva.ai, which is an AI HR tech company that I co-founded. How long ago was it? A little over 5 years ago, almost to the day, actually. So that one was with Dr. David Yang, a billionaire in Silicon Valley, a good friend of mine. We co-founded the company together. I'm the CEO, president, co-founder of GSD, Get Shit Done Venture Studios, premier AI and quantum venture studio located in Santa Clara, California. We peruse the world looking for incredible AI and quantum companies and use Silicon Valley support because the valuations are high. Investors are there from all over the world. And it's just a great place to develop partnerships and opportunities. So also write a lot. My next article on quantum computing is coming out in Forbes, maybe tomorrow. I've written 127 articles in a little over a year now.
Wow, that's quite an achievement. Thank you, Gary. And we love to have you on all our panels. I think you should start investing into Bitcoin and crypto projects as well.
I do.
Okay, so we're going to talk about that in this episode of the TV. Great, good to know. Okay, let's start with some global trends in digital asset investing. So, what are the global trends in digital asset investing? Let's start with you, Adrian.
To start this, I would like to go back to your initial question: why institutional investors are putting funds here? We are at the forefront of the mass adoption of this new asset class, and of course, we have really good established projects which could be seen as store of value. Even if there is high volatility, but still the fundamentals are there. And also we have very speculating things with very little fundamentals. I'm calling these like meme projects. And of course, I'm not talking about Doge. I'm talking about Shiba Inu, Kita Inu, or Husky, and I believe every dog breed will have its coins. And here, everybody has to be very, very cautious because the potential can be very big, but also the rock pools can be bigger. So there are so many established projects bringing value and hopefully more usability, which could be seen as store of value, and the returns, even from the established project, couldn't be overlooked by savvy investors who are looking for good potential returns with, of course, a little bit of safety. And all the times there is a report between the safety of investment and the return. Of course, the bigger the return, the bigger the risk, at least in theory. So we are seeing the going from birth to childhood to potentially teenage age of this new asset class. So it's one of the biggest trends in our life, and we are fortunate to be part of it.
Thank you so much explaining what's driving the institutional interest into cryptocurrencies. Thank you, Adrian. Next up, Patrick.
Yes. Let's say, so like Tesla kind of started a new trend where large company convert a little bit of a portion of their treasury, whatever excess cash that they have, to Bitcoin or other crypto. To me, like Tesla, $1.5 billion worth of it, they have a lot more cash in their bank account, essentially. So it's more, I would see more like an edge against the potential devaluation of USD. So they are trying to protect themselves and maybe give themselves a little bit kind of growth potential. but it's still a drop in the bucket.
Sorry to interrupt
Yes.
you. Have you got a session? Have you got a session open?
I have only one session open, and I'm using my this. So
I think it's okay now. Yes, carry on.
is it better now? Yes. No.
Yeah.
It was fine earlier. Oh well. So yeah, I think the like a big company like this, even if they converted like a tiny part of their excess cash into Bitcoin, even if Bitcoin shrink 50% tomorrow, they can wait it out. They can wait 3-4 years because they don't need necessarily that money right away. So for us, what we see a better long-term trend is that we design our own token with exactly that use case in mind, but we try to prevent volatility, and we shield whichever company want to transition part of their cash flow and their excess cash into the crypto. In Cryptium, that's the token we built. Like the goal is that those small business, they think in terms of 12 to 18 months. So if the price of the crypto crash 50-70%, it's going to really hurt them. They need to be able to pay their employee. So, but they do want the growth. Like if you put your money in a bank account,
Yeah.
and then the US print 35% of the currency in 1 year, what's going to be an impact on your purchasing power next year? So we don't know. So I think this is the trend moving in the direction from small and big company converting a part of their cash flow just to protect themselves in a sense. And I think we're going to see a lot more of that happening.
Right. Yeah, I think nicely explained again, Patrick. Thank you so much. Next up, Gary.
Yeah, sure, Sonny. So can you repeat the question so I can?
So what the global trends in digital asset investing?
Yeah. I mean, the situation right now is as we see, I mean, look at Ethereum actually as we speak. I just looked a few minutes ago. It's up, 11%. And so what we're seeing is we're seeing these investors. It's gone from the outskirts, right? It's funny. I talked to Quorum Schroff has got 1 million Bitcoins, and Quorum and I've had several conversations. And one of the things that it's interesting, we've gone from, people primarily looking at cryptocurrencies as the tools of drug traders to people looking at cryptocurrencies really as we transform in this digital world. So and this happens, by the way, of all technology, Sonny, it's not like unique. When we did I started the first e-commerce consulting company, one of them called Broadient. And when I started that company, people said that people weren't going to be buying things online. I know now it's kind of strange, but it was really normal then. Nobody's going to want to use their credit card. It's not going to happen. And then we started building Walmart. We started to build Delta, American Airlines websites, among many others. But what happened is we talked about it being a $30 billion cottage industry, and the big folks weren't in it. But all of a sudden they started to change, and it started to get adopted. And now look at it now, Amazon standard. At the time they were a bookseller. So what I'm seeing is that we've had to go the beginning of this pandemic, through this digital transformation, companies really opened up their eyes and understood that they had to make some changes. Then you see down in Miami, the mayor of Miami adopt Bitcoin and talk about Bitcoin and blockchain. And so now the situation is, as you start to see banks start to adopt it, start to invest in it, then you see Tesla. It's becoming mainstream. It's just the way it is. And, I don't want to make any predictions on it. Although the only thing is, I think we're just at the beginning. We're not at the end. At the same time, Sonny, we got to be really careful, because when you start coming out with coins and they're being minted at this kind of rate, just like any kind of market, including e-commerce, there are going to be people that win and lose. So make sure, there was an Indiana Jones film many years ago with Harrison Ford and Sean Connery. Make sure you choose wisely.
Oh,
And
yeah,
so
sure.
you're going to see more. I mean, it's it's funny because literally across the street from where I am, we have a Bitcoin ATM in the gas station. So when that starts to happen, that you're talking about mass adoption. You're going to see it's like a tidal wave going to come through, and you're going to start to see specifically, Ethereum, and of course Bitcoin. But you're going to see Ethereum. You're going to see these start to move out of the pack, right? And then you're going to see some of the other ones that haven't really had the right stuff. You're going to see them shake out. You're going to see a couple of them come to the top, and it always happens in markets, right? It's as we cross, we've crossed the chasm now.
Okay, so thank you so much, Gary. So we have cryptocurrencies, we have Bitcoin, then we have DeFi, and we have NFTs as well. We're going to go deep into those, but let's just start with some of the most popular. I think recently Patrick has made an acquisition. So, what are some of the most popular and effective crypto investing strategy? What are the pros and cons? So let's just start with that then. Then we can go a little bit into details on DeFi and NFTs. So, Patrick, as per you, what are the most popular and effective crypto investing strategies, and what are the pros and cons?
So maybe I can go back to this. The token we designed for the cash flow. So our investment strategy is that we just didn't like the formula that is used by VC in Silicon Valley and has been promoted all over the world. So because the problem with this is that you lose your money most of the time with your investment, and there's a few winner in your portfolio that end up making you thousands of percent of return, like more than 10x, and you make all your money with those few winners. And then all of those VC never like to invest in lifestyle business. A profitable business that is doing just well, but they're never going to have a massive exit because they scale, but slowly, and they don't have that massive scalability. Those businesses are not bad. The economy needs them. They are more sustainable. So I wanted to design a token that would enable us to make money and strong return with them. So that means that we could not rely on the equity alone. So this is why we design a token that essentially we do buy equity of the business for the upside in the long run. It's not liquid right away. It may take 5-10 years or more. Doesn't matter.
Oh.
We make money on the cash flow. So essentially, the token itself, as more business kind of convert part of their cash flow to it, the token is not just like an imaginative value in the mind of people like Bitcoin or other tokens. There's a contractual obligation for those business to maintain a specific ratio of cryptium in their cash flow. So as the company grow and their cash flow requirement increase, they have to buy more of cryptium from the market, which push the price up for everybody. So it doesn't really cost anything to anybody. It's just the kind of the demand for the currency improve, so you can make money on the currency itself. As opposed if you're an investor and you mediate all your investment with USD, then your investment cannot influence the value of the currency. It will, but in such tiny fraction that you cannot leverage it. So that's why, and then you're at the mercy of the market if the US currency will improve and multiply by 2 in terms of value. It's very unlikely to happen. But back in Canada 10 years ago, there was a few companies that started exploiting petrol, and then the Canadian currency went from 70 cents to $1.06 and within 3 years as a comparison to the US. So any companies or individual that had money in their bank account had an increase of purchasing power, and it didn't cost anything to anybody. So this is that model we're kind of reproducing with the crypto. And it's liquid, which is interesting. And we're on track to do about 230% return this year from it. And it's not relying only on the equity.
Yeah.
So we can invest in farm, we can invest in sustainable business, grocery store. we can improve their margins and we can make them more sustainable.
Yeah, sorry. Thank you so much, Patrick, because I got so excited about this recent acquisition. So basically, Patrick has bought a company in Singapore, and he bought it with his own tokens.
Exactly, and they are profitable business. So essentially, it benefits the entire community of Cryptium because now they will actually grow the value of Cryptium too, and then Cryptium itself become not just speculative, but there's real business running that has nothing to do with crypto behind it too.
Yeah, and the employees are going to get paid in crypto. Wow.
What company did you buy, Patrick?
It's called Macchiato. It's a marketing agency. So essentially, they'll be helping us with market adoption at the same time. So it was a strategic investment on top of it for us.
And you bought them with crypto?
Yeah, the transaction is still ongoing. It's not finalized, but the head of the company, the CEO, she started working with us on Monday. So it's brand new.
No, that's great. Congratulations.
That's great. Yeah,
I think as more
great.
of those companies move in that direction, I think it will put non-speculative value for the entire market, which is great.
So maybe can you explain what's the difference between fiat investing with equity stakes and investing in crypto? For those who may not know the value that crypto brings.
Was that a question for me again, or
Yes, please.
someone else? Okay.
Right.
So if you mediate it with like a currency that is government backed, then you have the stability of the currency, hopefully, unless you're in Peru or Venezuela and you see a massive decline of your currency. That's the advantage of using a government-backed currency. Meanwhile, if you use crypto, like the danger is the volatility. But we designed Cryptium to prevent volatility with two mechanisms. I don't think we should go into detail of how that works. Like you can go to our website and contact us for the details, but it's built to make sure that you're shielded against that volatility. So the day traders and the people who do those manipulation of price can still do it, but the people who are stakers are unaffected from it. So that makes it a lot more safe than buying Bitcoin to a certain extent. Bitcoin is still great for a large business, but for a small one, I would maybe not recommend it as much because the thing, if the market crash next month and Bitcoin crash 30%, it's going to hurt those business significantly. If they don't have to, if they cannot wait 3-4 years for it to go back, it's a danger. So overall, the advantage of using crypto is that you don't have the currency exchange between multiple countries. Our team is spread all over the world. It's a lot easier to deal with that. They all converted back to fiat in their own country. And in the meantime, the value of the money in the past month has increased 240%, I think. So the employee that got paid early at the beginning of the last month, they had a pretty massive boost of purchasing power. It's not going to always be that much because we are just starting, but that's the advantage.
Wow, that's a great advantage of crypto investing and purchasing companies, like acquiring company. Thank you so much, Patrick. So Adrian, so we've got a use case here, and we'd like to know from you what are some of the most popular, effective crypto investing strategies.
I would like to start by reading from an email I received on the 19th of April. And it said, over the weekend, the price of Bitcoin crashed to 51.3K and led to one of the biggest liquidation events in crypto history. According to the blog, roughly 164,000 future liquidations occurred, with 70% of these liquidations occurring on Binance. The whole idea is that in total, $8.46 billion in long liquidations occurred on April 17 alone. So due to the volatility, you need to have a strategy when investing, which will which will somehow work on all weathers, because even if you, let's say, if you are doing also some trading, if you are doing options, futures, you can have all the technical things in place, and one morning Elon Musk puts a tweet with him with a Bitcoin T-shirt, and everything is changed. So, and we are living in such a world when a tweet from an influencer can move the market like crazy, and you need to add that to your strategy. And the people who are doing this, let's say for 20 years, they say, no, this is not possible, this is not an effective strategy to take into consideration. We are doing things the way we know from the stock market, and look at what happens in one day, a lot of liquidations. So there are different strategies. One of them working very well is what I'm calling the asset strategy. So basically you put money in the underlying assets and you do arbitrage, or you are taking profits, reinvest in other things, but don't use leverage. And of course, in other strategies, you can put smaller amounts in high leveraged, high risk positions, but not to affect the whole portfolio, because even here with crypto works Warren Buffett's basic rule: never to lose the capital, because if you are losing the capital, it's very hard to get back. And what Patrick said about investments in the venture capital world, that most of the investors are losing their money, but we are in such a tiny world that we only see the IPOs, we only see the huge successes, and somehow it seems like the big failures and bankruptcies and massive losing of funds, they don't exist, because all the information is around those massive successes. So all the time you need to make the effort and to start learning and to do somehow your own due diligence, because at the end of the day, it's your money. Even if you are playing with investors' money, they are looking for a return on investment. They are not looking at to receive an email from you saying that, sorry, the funds disappeared. So it's a huge effort all the time to focus on, I don't know, 5 to 10% of the investment strategies, ideas, which will keep you in the market and will be able to multiply the funds and to give a return on investment. So this is what I'm seeing. If you want to play very, very high risk, play with portions of the assets. So if something bad happens, you will not lose everything.
Yeah.
At small level, medium level, and even at a big level can be applied.
Okay, we've got Peter as well, who just joined us now. Hi, Peter.
Hello, everyone.
Hi, Peter. I think it's quite early for you there. That's why you were
A little bit,
late?
yes. My apologies.
So, no. Which country are you dialing from?
I'm in New York, in the U.S.
Okay, and what time is it?
It is 7:30 a.m.
All right. Anyways, thank you for joining us. We are halfway through, but still, thank you for joining us. Can you have a quick round of intro about yourself, Peter?
Sure. My name is Peter Lyons. I am with 2 Prime Digital Assets. 2 Prime is a hedge fund, a very traditional hedge fund in many ways, except that we buy Bitcoin and Ethereum, and then we use the burgeoning options and derivatives markets to hedge those positions. So you can actually buy puts, sell calls on Bitcoin and Ethereum, There's a variety of different derivatives exchanges. But basically, our view is that when it comes to digital assets, institutional investors really need some risk management best practices. I think, as the previous speaker noted, it's not about gambling. It's not about speculation. It's really about trying to get consistently good returns while also managing downside volatility. And I think, particularly for Bitcoin and Ethereum, there are derivatives markets to do that. And in our experience, it's a very new space. I mean, these options and futures on Bitcoin and Ethereum have only existed for really only the past year. But the strategy is really working, and right now we have about 100 million under management. As the derivatives markets grow, so does the space for our fund to grow. I think you might be muted, Sunny.
Yes, sorry. Yes, thanks for reminding. I was on mute. Yeah, you've done the right time, Peter, and welcome to VCTV. Is it your first time on VCTV, or you've been?
Oh no, I've been I think twice before.
Twice before. Okay, cool. Welcome to VCTV Asia. This is where I host on this time, early morning for you, and I hope to see you more on this time zone as well. Thank you.
Yeah.
Gary, over to you with the same question. If you don't remember my question, so what are some of the most popular and effective crypto investing strategy? What are the pros and cons? We've spoken about pros, and what are the cons as well? Let's just hear it from you.
Scotty, can I just, Peter, can I just ask Peter one question before we get started? It's interesting for me. I was with a couple of extremely high net worth individuals yesterday. These things, what's the adoption? Are people open to the futures, the puts and options trading with the crypto? I mean, is that something from your standpoint? Is it because we had this discussion yesterday directly about that? Is it? Are they accepting it or no? What's the feeling about it right now?
Well, I think it really comes down to execution, right? I mean, from our perspective, we're coming from a traditional equities volatility, hedging market where, there's obviously a lot more volatility in crypto than in traditional equities, but a lot of the same principles are applied. I think what's different is how we look at, when are we applying the puts and, how are we sort of adjusting the strategy based on like the price action. And then you're also looking at the on-chain data. So, it's a mix of sort of new and old ways of looking at volatility and looking at the market. But I think that institutional investors want exposure to digital assets. I think what's interesting is that, I think many are familiar with the Bitcoin play. I think less are as familiar with Ethereum. But what we're seeing happen with Ethereum now is a lot of interest, a lot of Ethereum coming off the exchanges, going into private wallets. We're seeing the volumes really start to reflect a institutional appetite. So I would say institutions are interested, Gary, to answer your question.
Yeah, I mean, I was on this call with Khurram Shroff. He's got about 1 million Bitcoins. I don't know if you know who. And we had some discussions about Ethereum, and it's just, for me, it's fascinating. Obviously, I'm an investor, but Ethereum's up 14% right now. It's just insane. I mean, it's incredible. And so I'm just, now as we start to move mainstream with it, you're going to see all these financial tools start to come to play, and we're going to be treating it. I mean, it's not just a transaction. This is really, it's like, trading currencies. It's insane. It's one side's investment, and people, but on the other side is to be traded, and people don't want to trade it because they're afraid of losing money.
Yeah.
I've never seen anything like it in my life. You know what I mean?
It's exciting.
Like I don't want to trade. You know, and the thing is, it's like, okay, I want to do Bitcoin and I want to do transactions of Bitcoin, but I'm afraid to do it because I might lose money because it's going to be up at 5% by the end of the day. You know what I mean? It's like such a weird situation. It's incredible. So no, I see it too, and it's just as I start to see this become mainstream, and then having conversation. I just interviewed the mayor of Miami Beach recently, and had some discussions with the mayor's office in Miami. And you know, as you start to see this being adopted, it's changing so quickly. It's like a tsunami coming in a positive way.
Yeah, I mean, I think cities now are looking to allocate some of the the city treasury into Bitcoin, and I think increasingly Ethereum as well. And those are the types of institutional investors that we want to work with. We think it's not simply about going to Grayscale, putting a bunch of money in, and hoping that it keeps going up. You have to really be responsible and manage the risk. I mean, this is people's livelihoods, and it's really about making sure that you're managing the client's money in a responsible way. And yeah, it's 7 days a week job.
Sonny, I just want to say one other thing. Very interesting. I'm glad Peter's on today, and I'd rather talk to him than myself right now because I'm curious about. But Peter, one other thing is, I had somebody say this again, another super high net worth individual here in Palm Beach, and he was saying that I don't have a choice but to get into cryptocurrencies because if I don't, I'm going to fall so far behind. I mean, and I was like, I've never heard anybody at that kind of level talk about falling behind in terms of, compared to their peers, right? Because the peers invested in Bitcoin, and one of them invested at 10,000, and now it's 55, right? And so, I mean, literally, I've never heard any. This guy was really nervous.
Yeah.
What's that?
The FOMO, the fear of missing out.
Yeah.
FOMO.
And the thing is, that fear's driving some of the prices up, but at the same time, when you get Ethereum and some of the, as we go through this digital transformation and, start to look at this entirely different way at transactions, it's redefining the entire financial structure, right? Globally.
Yeah.
And it's fascinating for me, because I'm hearing it, I'm hearing it one side with Shahal and Quorum, and the other side, I'm hearing it from, folks in government. It's happening too quickly, and the places that don't get into it are going to be out, right? It's going to be really interesting society where you've got countries that have bought into it, that are transaction and optimizing the opportunities, and people that have it that are going to be on the outside looking in. They're going to be outside of the global market, from my opinion, anyhow.
There's one strategy that. Oh, go ahead, Peter.
Sorry, Patrick. Please.
No, I was going to say that there's one strategy that we haven't approached at the moment, but the idea of yield farming and liquidity pools. Like when you're sitting on at least 2 different tokens that you can inject into some decentralized exchange, like right now, the same way, some of the pools we created on 1inch, for example, we're in control and it's earning us like 5% a day of transaction fee. So you just have to find the right pool, and you may have to move your money around to optimize, but that's what yield farming is all about. So when you're sitting on a lot of token, you don't have to just keep them in your vault. You can put some of them to work too. There's some good opportunity there. The danger in this case is the impermanent loss.
What for staking? Patrick, staking.
Yes, yeah, exactly.
Yeah.
So it's honestly that all DeFi industry has opened the doors quite a bit to put your crypto to work.
On DeFi.
Yeah, it's all about passive income.
One of our approaches is, with all the Bitcoin and Ethereum, we have, the 100 million or so. We take about half of that and actually lend it out to other large hedge funds with very strong balance sheets, and we're earning between 5 and 8% annual yield on that Bitcoin that is lent out in Bitcoin and repaid in Bitcoin. So I think there's going to be some compression there in the yields on the crypto, but that's Bitcoin. I mean, I'm sure that other coins could potentially yield higher. So we're all about that, and as well as the spot futures trade, the contango as well. Using futures, you can actually lock in for Bitcoin and Ethereum some yields. With very low risk, simply by playing on the spot in the futures.
Interesting.
Well, that's that's amazing, actually. And Peter, so if somebody, if somebody's looking at Bitcoin 2 months from now, how in the world can you forecast, right, where it's going to be? How do you sell those options? How does it work, right? I mean, right, Sonny? I mean, it's incredible how how in the world can you even stake it? I mean, it's because it's not. The trajectory is not even. It's not like it's a linear trajectory. How do you do it?
So we look at the stock to flow primarily, and then we're looking. If we look at the stock to flow, what we see is 18 months after the last halving in Bitcoin in particular, we see the typical price peak, and we look at 2012 and 2016. Now, it's not exactly the same, I think, every cycle, but I think that's a rough guide. And, what that sort of points to, what we expect is somewhere between 150 to 250, sometime by the end of the year. Now, with Ethereum, I think the potential for upside is higher. And there's not really a sort of like playbook, a stock to flow playbook. Well, there is when it comes to Ethereum, there is a certain finite amount of Ethereum that can be minted, but I think with Ethereum, the upside is potentially higher. But yeah, it's really sort of impossible to know. I think it's difficult to time these things. And I think people that are looking at this for the long term should be in it for the long term. People that are trying to, get in and, get out within a few months, that's a very risky proposition.
Yeah.
I mean, my daughter is day trades crypto and Robin, and she's a millennial, and there's a lot of millennials doing those kind of things today, and they're doing okay with it, by the way.
Yeah, I hope something like Dogecoin. If you look at some of the momentum behind some of these trades, Dogecoin has had this incredible run up, but we wouldn't touch Dogecoin with a 20-foot pole. And why? Well, Dogecoin doesn't actually have any developers. There's no core development team. There's nobody actually running or there to take care of things if there's any bugs. It's purely speculation. And I think when Dogecoin and others like it, inevitably crash and burn, I think a lot of people on Robinhood, for example, are going to have a lot of sleepless nights.
Yeah. I mean, don't you think it'll affect all the other coins, all the other
absolutely. You're going to end up with the regulators and legislators saying, "What's this Dogecoin, Dogcoin?"
Yeah. Exactly. I agree with you 100%. I mean, that happens, right? It's a Dutch tulip phenomenon.
Yeah.
And they're going to come in and they're going to start hammering it when they shouldn't be. So, yeah, it's interesting. Really interesting. And I was wondering about, and how does somebody go down through and look through all the coins to figure out which one are the ones to really buy into or not? Because there's so much speculation out there, right?
So there are resources that look at, for example, I don't know if you guys are familiar with GitHub, but it's where a lot of the open source world sort of like puts their, their work, and you can look, by project, for example, and see like, okay, how many active monthly developers are associated with, Ethereum. Ethereum is by far, the largest developer community. If you look at Dogecoin, it's like there's no active monthly developers, right? You look at Bitcoin, you have a reasonable amount. You can compare these projects by looking at, what's the sort of intellectual capital kind of backing these things.
Right.
And I think that's first and foremost, that gives you a sense of where these things are. Are they serious? Are there actually is there brain power behind it?
Yeah.
And all of that stuff is freely available. You can, there's different resources for getting that information.
To me, that's my biggest fear also. If you guys remember, like in 97, 98, with the dot-com bubble, like traders would be afraid to go to lunch because they would lose so much money just not being there to trade on all the IPO that were coming out. And some of those IPO were just complete nonsense. There were some, I remember one company that their entire business model was to sell toilet paper online, which made like 0 cents at that point in time. But now that's what the thing that does.
I know why you're laughing, Sonny.
They were 20 years too early.
Yeah. Now it makes sense. But back then, no. And I think all the Doge and the Safe Moon and all those tokens they are not solving any problems. They are just anybody who threw money right now on the market will get those tokens that grew like 10,000, 50,000%. Even if they lose money, you just spread $50 on like thousands of projects. The one that will grow so much that you'll be recovering all your loss. The thing, the entire market will have to cool down, and that to me that's the biggest fear, is that with all those tokens growing so fast right now, I really fear that not only the regulator will come in, but when people start to lose money, the entire market will crash pretty badly because of those. All those projects make no sense. So
I remember, Patrick, in March 2000, because I did an IPO in June, right? The market crashed in March. We were riding it up through Click Software. And I remember we did the IPO in June. I remember what happened. It was like, for the next year after that, it was like Death Valley out in Silicon Valley. People were disappearing. It was unbelievable attitude, but it came back. It was one of the cycles they went through. But the stuff, you're right, there was so much pets.com and the sock puppets and everything else. Although now Webvan, some of those technologies, toilet paper, some of those things that are out there would be interesting today. They just were ahead of their time, and they were, they were the Dutch tulip. It was a Dutch tulip phenomenon.
But they were just way too overvalued. Like back then, the market was so small, it didn't make sense that they were worth more than a company like Rockwell Collins that was a Fortune 500 with 50,000 employees. It didn't make sense. The evaluation was just out of whack.
Yeah, and that's the big fear right now, right? The big fear is that, unfortunately, there's so much hype that people are buying into all these coins, like you said, like Peter said, that may not have the backup, the developers to really, back up what the price of the coin is. So you got to so what you want to do is you want to look at the fundamentals. It always goes back to fundamentals, right? And so look at the fundamentals of what you're investing in and don't get carried up in the hype, because if you do, that's where you get slammed. Nothing good will happen.
So what is she doing, your daughter, on Robinhood? What is she trading?
She's trading Ethereum and she's trading Bitcoin. That's what she's doing. I mean, she's doing, she does it for fun. And she's not the only millennial. These millennials are really jumping into stuff. They're like a big pack of, piranhas out there. They're going after, stuff, and they're smart, right? They go out together. They go on Reddit and all kinds of places and get data. Yeah. And, that's very easy for them. She grew up in a different world. And, so they work together on things. It's amazing, actually.
And the thing is, some of those micro cap once you start getting influencers on board, people, that's why they make those channels on TikTok, on Instagram, on whatever, and then they push the token afterward, and so they can actually influence the market, because those micro caps are so small that it's like another GameStop.
There's a lot of pump and dump.
Yeah, and they keep recycling, and they keep moving their money, and it works for them. But
but if you get the fluctuations like you have in these cryptocurrencies, even the good ones, right? I'm looking at Ethereum's up 13, and I believe in Ethereum too, but it's up 13.34% just today. That's a lot, right? In 24 hours. So it's it's interesting. It's incredible. And and Patrick, I feel I was there. I was in Silicon Valley doing an e-commerce startup, and I did an IPO. I was right there when all this stuff was going on. And I remember people did not want to leave their office. I remember people going into stores for Christmas and buying out the Mont Blanc pens because they had so much money. It was unbelievable.
It was good times.
Yeah, no, it's interesting. So sorry about it, Sonny. It's just, and the toilet paper thing got me too. That
I know.
We've had discussions about toilet paper, you know. We should do a toilet paper thing, right?
Selling toilet papers online.
Yeah, there you
go. Thank you. It's become a very okay. Go, Patrick. Carry on.
No, I was making another joke that I heard of another token called "Feed Your Gorilla." So nowadays, the token is called that, "Feed Your Gorilla." They don't even try to make legit project anymore. They make just memes and jokes, and somehow they explode just because of all the people who have that fear of missing out. What if it grew 10,000%? I'll put just $50, and then it's a self-fulfilling prophecy that it actually.
NFTs are the logical extension. I mean, talk about memetics, right? I mean, this is basically people just, creating something and sort of engineering this FOMO, and next thing you know, somebody's paid $60 million for something that's accessible to anyone online. I mean, I think NFTs, to me, they sort of like that's the foam, that's the frothiness, right? That's not something I think that is like a positive indicator of where things are. But eventually, maybe these NFTs become something like securities or some kind of, royalty paying products for musicians. But that's a very different proposition, and that's going to involve, securities regulators. But NFTs, as they are now, I think are just they represent some real frothiness, I think, in the space.
Right, but there's a lot of noise around NFTs. And I wanted to discuss on this panel, but I think we are running short of time. Peter, you joined us late, so next time I would really appreciate if you can join me on time, especially on this topic, because we're going to cover DeFi, we're going to cover NFTs as well. A lot of people are asking me about NFTs, how they work, and why should they invest, and what is the return on investment? That's the question I'm stuck at. What's the return on investment on an NFT?
Well, it's like I think for many people, it's just sort of bragging rights, or it's some kind of like, hey, this is I have this great piece of art hanging in my house, except I just want everyone in the world to know that I have this artwork hanging in my house. And then there's some kind of like validation for that. I think it's a very subjective and I think the vast majority of people on NFT are just going to lose whatever money they put in, including the creators, right? They're going to spend the gas fees. They're going to put something up there. They're going to sit and wait for somebody to bid on it. And, I think the way this is set, the way this works is, it's only really ever going to accrue to a very small minority of people.
I have a $65 million NFT in my USB key. It's great.
Just don't lose it.
No, I don't buy that stuff. But
Well, Peter nicely explained. I have art in my art hanging in my wall. I want to NFT it and make it digital and available to everybody.
But but it's like it's almost like the value of it is really like in sort of others kind of like knowing that you have it, right? And it's not even necessarily like you personally, but it feels like high school. It feels like some kind of popularity contest. It's very basic human psychology and FOMO psychology and meme psychology, but it seems like it's not something I personally or professionally would try to get involved in, maybe because I just don't understand it the way the experts in the space do.
Same here. I'm trying to. Thank you so much. Thank you, Peter, for joining us. Adrian, thank you again for joining us. And obviously, this is the ecosystem community that we would like to build at VCTV, where people bring in their expertise. Patrick bought a company in tokens. Wow, that's amazing. Peter, it's all about trading, options, stocks, NFTs, DeFi. So I'm going to hear more from you in the coming sessions as well. And Adrian as well, we couldn't hear much from you, but nevertheless, we are running the show every day. I'm going to cover more and more crypto-related topics in coming weeks. So please stay tuned, and let's take some quick closing remarks from each of you, and we wrap up the show. Patrick, your closing remarks, please.
Invest wisely. Look at tokens or crypto technology that solve real problems. Look at alternative way to make to earn passive income with your existing token, like Bitcoin, things like that. They are still worth having in your portfolio. Try to diversify. We published a blog post about diversification. It's all about correlation. Most of the market is correlated, but there's a few tokens that are not. So it's worth taking a look into that for diversification. Don't rely on just one thing.
Thank you. Always invest wisely. Thank you so much, Patrick. Peter.
I think the space is really interesting. It's growing. It's attracting some of the big institutional players. I would say for those that want to learn more about how institutions are getting involved, we are always happy to share the data, to talk to people. Just follow us on LinkedIn at 2Prime Digital Assets or our website 2prime.io, and we'll be happy to share what we know.
Sure. Thank you, Peter. Adrian.
I always bet on diversification, but in the same time, diversification can be a bad thing if it's done by the sake of being done. Also, specialization is very good. Try to learn as much possible about a certain category of assets to be better than 90% in the market. And from time to time, take the profits and reinvest in another asset classes like stocks or real estate or other things. So it's a combination between diversification and specialization, which will create a portfolio for any type of weather, because at the end of the day, I believe this is the most important aspect for the people who are here on long term. I can be found on LinkedIn. I answer to all messages there. Thank you very much for having me here in the VCTV family, as usual, the Asia one.
Thank you, Adrian, for joining back on VCTV Asia. Last but not least, Gary, what's your closing remarks?
Yeah, absolutely. No, it's this is what we have is an exciting opportunity in the digital transformation of the planet, and it's really exciting. So breaking down borders, being able to do transactions we've never been able to do before, smart contracts, blockchain, crypto, all kind of exciting, incredible technologies. We have to be careful. We need to look at cybersecurity. Cybersecurity is going to be incredibly important in a decentralized way with companies like SplitByte out there that can really help solve some of these issues. At the same time, look at the fundamentals. Some things never change. Look at the fundamentals of the company. Don't get into the Dutch tulip phenomenon and just invest because you're into the hype. Look at what the company does. As Peter said, look at the developers that are behind it. Make sure that there's the right stuff behind it, that the company's going to be around. And if you do those kind of things, you maximize. I do diversify too across, invest in all kinds of different areas. That's really important. Not to put all your eggs in one basket. You got to be careful about that. So it's an exciting opportunity. It's a great time to invest. It's a great time to see how the planet's changing. And, the pandemic's done a lot of not good things over the last year, but one of the things it did do is helped us all come together in a digitally transformed way to make the world a little bit better place. So you can reach me, Gary Fowler, on LinkedIn, Twitter. I actually have a show today talking about health tech. Got a lot of good stuff on quantum and AI. So tune in, and it's great to see our VCTV family. And Patrick, thanks for talking about the toilet paper thing, because it just was a beautiful day today. Because Sonny and I joke about, we have quantum computers, but we couldn't get a roll of toilet paper 9 months ago. And now it's funny, but it wasn't funny then.
Of course not. Oh my God, it wasn't funny at all. It was all over media, everywhere. It was scary.
Exactly. And if we would have had the toilet paper, we'd have made a fortune.
Exactly. Oh my God. Thank you so much, Gary, Patrick, Peter, Adrian, for joining the session. And I'm going to be back again tomorrow on another episode of VCTV. Till then, keep watching VCTV. Stay safe, and I'm going to see you again. Take care. Bye-bye.
Thank you, Sunny.
Bye-bye.
Bye.